A warm welcome, ladies and gentlemen, to the CNBC Africa IFC debate, which builds on the recently released report, New Horizons in African Finance, Reducing Risk and Mobilizing Capital on a New Scale. Sub-Saharan Africa saw 3.4% growth in 2015. This is according to the World Bank, and is forecast to grow at 4.2% for 2016, moving up to 4.7% 2017-2018. In contrast, advanced economies are growing at a mere 2%, and in that lies a huge competitive advantage. Some context when it comes to capital flows, and here I borrow from the IFC data. Gross capital flows for Africa in 2005 stood at $9 billion US. That increased in 2014 to some $49 billion US, falling back because of the current economic constraints that we're seeing, reduced liquidity to $40 billion. What we do know is that Africa desperately needs capital for its future growth. Joining me to take this discussion further, to look at reducing risk and mobilizing capital on a new scale, I am joined by Honorable Clever Gatete, who is the Minister of Finance and Minister of Economic Planning in the Republic of Rwanda. Honorable Adorame Cisse, who is the Minister of Budget, Côte d'Ivoire. Saran Kebet Koulibaly, who is Vice President of Sustainability and Risk Management at the IFC. Shannon May, who is co-founder Bridge International Academies. Edward Matthias, who's Managing Director of the Carlyle Group. And Hubert Danso, who is CEO and Vice Chairman of Africa Investor Group. Thank you so much for your time. So Hubert, you are igniting debate. Sahan has said she would like to come in, so has Edward. So Edward, I know the point was made. If you can go in soon, and Sahan, if you can take us back earlier.
I'll be very brief. Following up on Hubert, there's two areas that are going to make a huge difference initially. One is infrastructure. It is very difficult to do business. So attracting infrastructure capital is just extraordinarily important, and that will beget success. The second is attract corporations. Major corporations have a real incentive to have a presence here. They will not initially be economically driven. It will be strategic. And that's one thing the President's Council's been trying to do, but I know a lot of the African organizations, the governments are doing the same. So when you get Coca-Cola, Caterpillar, Deere, others building plants, that will beget business, and then there will be much more investment opportunities.
Infrastructure, is that what ignited you?
Yes, indeed. I think I wanted to make a similar point as Ed just made. And I think in the current context, what is happening is not really surprising, because most private sector tend to focus on the smaller projects because they have more visibility on those ones. But infrastructure is absolutely critical. And for that to happen, it goes back to the comments I was making earlier, that the need to create a sector where of reform, where private sector can come and we can crowd in the private sector financing. And this is where it is important, because the risks are high, regulatory risks are high, but even the perception of risk is even higher. Because people just don't know the environment and cannot predict, do not have that visibility. And that's where I think institutions like IFC come in. You mentioned, both of you mentioned on a couple of occasions, institutional investors. This is not yet where the interest in Africa is not there yet. But there is a possibility, actually, through the risk mitigation that multilateral institutions like IFC have to mitigate some of the risk, and creating actually new products that are in new asset classes through structured finance, and creating products that are investment grade, through which they can invest in infrastructure. Because without that, it will be difficult to bring in financing to Africa in the scale that is needed. It will still remain the smaller size projects, and infrastructure, nothing will happen without that infrastructure being in place.
Minister Gatete, we're coming to our currency volatility question, but Minister Cisse wanted to come in again, I'm assuming on infrastructure.
Same thing on infrastructure. I mean, it's really key because at the end of the day, what government is trying to do is to improve the quality of life of the population. So we need to make sure that we give basic access to the population, and we need to give them jobs. Because if you take a country like Cote d'Ivoire, demography, transition is key. We basically have around 77% of the population that is lower than, that is less than 35 years old. So we need to find them jobs. So we need big infrastructure projects. If you take electricity, for example, we've been growing at around 9% per annum every year. When you grow, it basically means also that your demand for electricity grows at the same time. And for the past 4 years, we managed to increase our capacity by around 38%. We basically now have around 2,000 megawatt of capacity. That is actually half of the capacity of Nigeria, when we only have 24 million inhabitants. So there's a lot of things going on. We just closed a few weeks ago a deal with Endeavor. It's a $900 million deal to build a 375 megawatt capacity in Cote d'Ivoire. So infrastructure is key. We try to do it on the budget by allocating a decent size, but we can't do it all by ourselves. And experience is actually also important. We did a couple of deals where we did give a lot of guarantees to people, like PPAs. We did some revenues guarantee. We won't continue to do that forever, but we had to do it for the deals to happen.
So I think what I'm going to do is that the debate has been hijacked slightly in that let's focus on infrastructure financing. And we've got another 30 minutes to take this discussion to some conclusion. I like to find something that we can get our teeth into rather than flitting all over the place and having half-hearted discussion. So let's focus on infrastructure. But Minister, I'm still going to get my currency volatility question in there because Edward said it is a key risk. And even if we are financing these large multi-year infrastructure projects, people cannot plan, investors cannot plan if there is currency volatility. So what is the solution there? And let's do it in the infrastructure context.
Thank you very much. Before we come to the currency volatility, let me just say that actually the area of infrastructure is very, very important. But I'm happy to say that some of the investors are now responding to the investment in infrastructure. At least in the case of Rwanda, based on what you just said, Rwanda being one of the top 2 in Africa in terms of ease of doing business and among the 3 countries in competitiveness. And in addition to other areas, security, governance, and all other areas, we've seen many investors coming in. They came in after we've done a strategy, for example, on energy, if I can give that one as an example, where we realized that actually government cannot do everything. We used to invest in generation, invest in infrastructure that transports the electricity, and also invest in access. And then we realized that actually, if you have a PPA, that means you are guaranteeing actually purchasing from the private sector. Why can't they invest money? So when we came up with this strategy, we've seen so many companies coming in. We've seen an American company, Contour Global, coming in for exploitation of methane gas to power, 100 megawatts. They have now completed 25. We have got another one that is going to exploit 75 megawatts of energy. We've got a Turkish company that is now generating feed to power, 80 megawatts, and it is working, it's coming up, so that the government can focus on some of the kind of cross-border, like the Sumo project, which is co-financed by the World Bank and the ADB, 80 megawatts, and also the C3, 147 megawatts that we are now discussing together with other regional projects. But once you put a strategy in place, they need to attract. And then you can focus on the infrastructure that is transporting electricity, as I mentioned, and also looking at the access, where you can also work with
you talk about
others.
the strategy as a feasibility study,
Yes.
the all-important feasibility
The strategy
study.
of the government guides how they invest, and that way it attracts if the country is attractive. So what I'm giving here is an example of what is working in Rwanda, and that's the same thing in other big areas, as I mentioned, in the new airport, where we're getting investors actually rushing to make sure that they become partners in this kind of project. But the continuation of the investment in infrastructure is dependent on the macroeconomic stability. And that's why we are coming to the, actually what you are saying about the currency volatility. Indeed, in this period, we are having several problems which are affecting all of us. One is the decline in the GDP growth by China. It has been a big consumer of our commodities. And now when the economy declines, last year 6.9, and now it's coming down to 6.5. And once it declines, meaning that actually all our exports, also in terms of commodities, are also being affected, especially minerals. At the same time, the European region has not really recovered completely, given the previous debt crisis, the issues that they have been having, and it hasn't come up as strong as we expected. But also United States, which has been the pusher, and that one is coming to the currency. You know, after pumping in 3 trillion in quantitative easing and now retracting and saying that we are going to raise the interest rate, means actually the money that was being pumped in the whole system is no longer reaching our own region. And that's why for the African countries going in the market now to issue a Euro bond, it's very expensive. Now it's almost close to 10% or slightly above 10%.
So can we mitigate against the risks?
But now is the increase in the currency, which is affecting all the others. That's where the focus, the key focus, is really what do we do to increase our exports? What do we do to make sure that some of the products that we have been importing can be produced in our own region? And what should we do so that we have the regional integration so that it becomes the buffer of all the markets? And that's what we are doing in Rwanda here. We are focusing heavily into the export promotion. We've now established not only the special economic zone, but also industrial parks, which are mainly focused on the exports. We put a fund, which is Export Growth Fund, that is helping the exporters. We are adding value to almost every commodity that we are exporting abroad, and we are providing fiscal incentives and other incentives to make sure that this area can be able to expand. This is the only way you can sustain it, because you need to make sure that you export and be able to sustain the foreign currency requirement that is needed for all the importers.
Minister Shannon there is indicating she wants to come in, but I do want to make a point on what you're saying on the manufacturing side, and it brings back to Minister Cisse. Shannon, I'm coming to you. That is, you're the #1 exporter of cocoa in Cote d'Ivoire, but you are beneficiating. You've just deployed a factory in making chocolate. Exactly. So that goes to the point that you're all moving in the right direction and taking advantage of currency.
Completely.
Shannon, coming to you.
If I may add, on the currency side and also on commodities, every country in Africa is different. So for example, you know, the drop in commodities prices, it's good for some importing, you know, like oil importing countries. And overall, you know, if you take everything aside, if you take, for example, Cote d'Ivoire, our currency is pegged to euro. So it's kind of like, you know, if you invest in Cote d'Ivoire, it's a euro type of trade that you're actually doing. And macroeconomic stability is key, as the minister mentioned. So every country has to make sure that they have a strong macroeconomic fundamentals and a story to sell in order to attract investment to the countries. But value-added product is definitely the area where we're all heading to, and regional integration too.
So Shannon, I'm assuming you're going to bring us back to infrastructure and how key it is to education, because you are leapfrogging in that space with digital technology. So we can play catch up to advanced economies, and I think you've got a very good example. Am I preempting what you're saying?
Very close to it, Bronwyn. So I wanted to challenge Ed's comment that the two most important things were investing in infrastructure and bringing over large multinational companies. Before we can do that, we have to invest in social infrastructure. Before you can do value-added businesses in your own country to increase your GDP, the single most important thing to do is to invest in basic education. A common mistake that is often made is investing only in elite education. So investing in a few schools, a few model schools, or allowing a few elite private schools to exist.
I'm going to come in here because I think that the starting point is still the electricity, the energy, because that is what is going to change the education equation. Without it, you're not going to be able to roll out that soft infrastructure or play catch up on the education deficit.
You have to have both, but if you ignore
what comes
structuring
first?
investment...
What comes first? What comes first? Come, Hubert, what comes first?
Well, I think, on the continent we get very stuck in the here and the now. But we've got to be competing looking at a 20 to 30 to 50-year view. And if we're really worried about accessing and mobilizing capital, we've really got to keep our eye on the $60 trillion global assets that are floating out there that are looking for the type of growth that the continent can uniquely offer. And they have sort of routinely explained to us the type of infrastructure in terms of the regulatory environment, the governments, standards that need to be in place, the type of quality and governance oversight of the investment management industry, of the investment managers and the mutual funds. We are very far behind on that, but we have an immense opportunity to catch up by working on that now. So I would say everything, we need to do more.
You're not answering my question. What comes first?
Yes.
No, you've lost your chance.
In parallel.
Edward, you go.
In parallel.
I can see you're going to give me a definitive answer
I'm
here.
going to give you a definitive answer.
All of the
Look,
above.
these things aren't mutually exclusive. I think education and the social, these are what I call long, slow ideas. But then you look at what are the big levers you can pull that make a difference short term, and it really gets down to infrastructure and economic activity. Because if you have that, and I know these things are interrelated, but that really creates the environment where you start to have jobs, you start to need educated people, you start to have the resources to pay for that. And let me throw out an idea that has multidimensional. First of all, the world is looking for returns today with negative interest rates, with the stock market muted. So nations or a continent that can provide high returns or the potential for high returns is very attractive. The fixed income markets for AAA and DFI investors are basically giving money away. You pay no interest, certainly based on inflation. To use to kind of raise money and to use that to create sort of the type of things we're talking about, provide risk mitigation. If you can get the greenfield early stage projects done, money will come in for assured rate of return. It'll be a different kind of money than you might expect, but there are people searching the world for return that's somewhat assured. So I come back to, I don't think these are mutually exclusive, but I think you have to.
So I just want to ask a question then to Shannon, in that you've made going back to your website, you make reference to that digital technology. If you do not have power, you cannot charge that technology to deploy your education solution. I'm just trying to find a starting point here. I don't know whether you can tell me that you can do it without solar energy or electricity, because I want one of those devices.
Yeah, so we do need energy. Power Africa is very important. But I think it's important to think about the exact uses of different pieces of infrastructure, what you're trying to really populate investment with. So for example, for us to run really effective schools, we do piggyback off of a couple things that if they don't exist, we couldn't run nearly as effective a school. So one is energy. We have to charge tablets and phones and devices. We do that sometimes by solar, sometimes by wind, sometimes by the grid. But not a single one of the 461 schools we operate actually has electricity connected to the school itself. We leverage off of kiosks and other institutions and entities in the communities. And then really important for us, and it's important for lots of businesses developing across the continent that actually work with the majority of the population living below $2 a day, is the cellular networks, which are incredibly important. And as we're starting to look expanding across parts of West Africa that don't have as much penetration on the cellular networks, that's a real issue that we're working with various governments on how to develop in parallel the cellular networks and education outreach services.
So I want to talk about that because we've got to bring it back to the financing, and let's use this infrastructure as a starting point. Blended finance we've chatted about, philanthropic and commercial capital. We've looked at public-private partnerships as being a very good anchor point for your infrastructure projects, for your multi-year infrastructure projects. Can I throw something in the mix here? Does Inga Dam resonate with anybody? Because I'm thinking if we've got a number of players, as we have here on the panel, cooperation and getting a project like Inga Dam, and I may be wrong, Minister Gatete, can I throw it to you?
Sure.
We're looking for a starting point.
Mm-hmm. Well, the Inga Dam has been there since I think I was born. We've been talking about Inga Dam powering the entire African continent, but we have not started up to now. I think we are still talking about it. And I think it goes back to, first of all, the structuring. How do you take on the entire Inga Dam all at once? How do you mobilize resources all at once? How many countries should be involved? How many companies should be involved? So if you don't break it into bits that can be chewed by the investors, then it becomes very difficult, and it remains there as a white elephant. So what we are saying is that there are many options. One is working within the regional communities, and that one helps. And that's what we've seen, for example, in the West Africa power pool. That's what we are doing in the East Africa, going in as a region rather than individual country looking for many investors, and maybe the environment also is not correct. It's like, how do you structure it in such a way that people are interested? And that's why the region becomes now very, very important when it comes to investment, especially when it comes to infrastructure, including energy, including cross-border infrastructure, other infrastructure projects like the railway that we are doing within the East African community. So Inga Dam is a very good project, but it has to be structured in such a way that it can attract investors.
So Sarah, let me bring you in here. Perhaps now, as Minister Gatete points out, that we're moving to regional projects that are being financed by investors and by different forms of investment capital. Maybe the mothership of all investments, we can ultimately build that regional to a play where Inga Dam doesn't look that complicated anymore, and everybody can come around the table. What, from a development finance institution perspective, can you throw in the pot here?
Well, look, let me say, I think that project, we tend to focus a lot on the huge projects. Inga Dam, I think, would certainly cover the needs, the power needs of, of Africa. But I think Minister Gatete was also saying it's important to break in different pieces. Because the complexity of such projects are very difficult and basically tend to discourage people to advance. I actually believe, and I may not be answering your question very directly, that there are a host of other smaller projects which could have as much impact as well when you take them collectively. And there is disruptive technology happening, for example, in certain spaces like the solar energy currently. I mean, I was hearing last week that the Mexican government was able to bid out solar projects for 4 to 5 cents a kilowatt hour. That's never heard of. So there's really technological advances that are happening that can provide local solutions to the power problem. And of course, working on bigger size projects on a regional basis. The West Africa Power Pool, it's been there for a while as well, but has not been fully functioning as well because of lack of natural gas and coming from Nigeria, where if there were reforms in the sector increasing the price of natural gas, for alternative uses, then you would see natural gas flowing into power generation. So there are intermediate solutions. I think
I think that I'm taking a cue from both you and Minister Gatete. Rather, let's talk about regionalization, regional power pools. I'll park Inga. I won't bring it up again. Edward, you want to come into the fray here, sir.
This is going to be perhaps related about regionalization, but one thing that countries need and regions need and continents need are strong capital markets. You need breadth, depth, regulation, and that is sorely lacking. So maybe some kind of regional market. I know Rwanda, other countries have raised money outside, but you really need good capital markets to foster economic activity, and that's particularly important now because of the pressure the banks are under.
Right, so Hubert, you've got a comment, and then I have to move to closing comments. I can't believe that we are almost out of time. So yes, you've got a double hit at this. You can go and then you're going to come back again at the end.
All right, very good. Now I'm just picking up on Ed's point about the capital markets, and if we are really serious about reducing the risks and sort of crowding in this institutional capital, we've really got to be much more serious than paying lip service to capital market development. We've got to come up with very practical instruments that are capable of de-risking. So for example, I sit on the Continental Business Network, which advises a number of African heads of state who are looking at very practical risk mitigation style instruments. And one of them is how can we take African projects, but principally African infrastructure projects, and wrap them and then ensure that they can actually gain better access to institutional insurance and global pools of capital, as well as the domestic pension fund pools. So the types of instruments that the IFC and others can really assist with is some of the bond type models where, for example, one of the concrete outcomes is a senior, fully secured debt instrument that can be issued by an insurance company with no concentration risk, AAA rated, BBB returns, regulated by the likes of Insolvency II, which is fully secured globally anywhere in the world. That's capable of happening right now today on African projects. But I think until we begin to look at the capital markets, the infrastructure around the capital markets, and improving the governance in the investment management industry, we're probably missing an opportunity, a very big opportunity.
It's a very big discussion, and certainly 1 hour is not enough time to do it justice, but thank you very much for your esteemed opinions. Thank you for being such an attentive audience, and that brings us to the close on the CNBC Africa IFC debate on New Horizons in African Finance.
Doing business in Africa, you can't afford to be without Africa Investor.